You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. How you doing? Welcome to Volatility Views, the premier program for volatility traders. My name is Mark Longo from the old OptionsInsider.com, as well as the network, the old Options Insider Radio Network. A lot of great shows, including this one, for you to enjoy. And you can enjoy them a lot of different ways. We even have those fun live ones you can join, like for example, this show. Every Friday, noon Central, 1 p.m. Eastern. Grab it via the Mixlrs, MIXLR. I know it's a weird name, weird URL. C'est la vie. We didn't make it. We just use it. Mixlr.com /options-insider, I believe, is our URL. Or you can just grab it. We tweet it out and Facebook it out and stock twit it out all the time. So you guys can grab it there. And then, so we go live with this show, Option Block, twice a week. Advisor's Option was hitting it this week. We had a bunch of people strolling through the studio for interviews this week. So a lot of stuff coming to the live. So if you don't want to wait for the podcast to come out, live is your best bet. And you can get it, enjoy it at your leisure, at your desk, on your mobile device, however you want to get it. And of course, you can always get the podcast via all the usual outlets, your iTunes, your TuneIn, your Stitchers, all that good stuff, and a lot of our partner sites as well, list of shows. So it's pretty much out there. Search for your show of choice. You'll find it. Or just grab the network. That's probably the easiest way to go. A lot of you like to go that way. And you get everything just sent to you, nonstop, 24/7. 365. Take a little bit of a break on the weekends, but stuff even hits then sometimes too. So all the time, options content will keep you busy, if nothing else, with some quality options content. So, and also hit us up, questions, comments, insights. We like to hear from you. Hit us up. We like to, if you can't hit us up, we can't hear from you. So hit us up. We do like to hear from you guys. And joining me on the old program today, the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com, by way of this little line of demarcation in the atmosphere, in the forestry even, called the Carmen line. Mr. Meatball, welcome back to the show, sir.
I'm here. How are you?
Good. How are you doing?
I'm happy.
How are things in the land of
happy as a clam?
A land of Carmen line by way of the pit. How are things?
Good. It was settlement today for SPX, which means that the new broad cap fund, our smart way of being long the market, had to do its monthly roll, and the VIX is threatening to hit 10. So What isn't to love about the market right now?
What's wrong with the world? The answer, nothing. Well, maybe you can pick a few things. We won't get into those. We'll just talk about the markets. It is time indeed for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly what it says. We review some volatility from the week that was and indeed still is. Trades, trends, analysis, developments, breaking stories, debates, all sorts of fun stuff going on in the world of volatility. As we're recording this and streaming this live, the markets were kind of more robustly in the green today, kind of settling back a little bit off that now. S&P slightly up on the day. The Dow kind of leading the charge, up about 0.3%. Tech-heavy NASDAQ off slightly on the day, so kind of a bit of a mixed bag. And as Mr. Meatball alluded to, VIX Cash continuing to go the way of the dodo. We're at a little bit shy of 11.25 as we're talking here right now. Let me just refresh us on where we were last. Oh, 11.67. That's right. That's where I was last week. So not looking too bad for me here on the old vol, on the old crystal ball. We got some time. Anything could happen, but not looking too bad. And our old friend VXX also giving up the ghost as a result, down to 26.35. This time last week, let's see, where were we? We were at, I have it here. I just put it in, and now, of course, I scrolled past it, which makes life so much easier. There we go. Yeah, we're about a little over a handle below, actually more than a handle now, about 1.5 handles lower than where we were at this time last week on the show. So our poll from a few weeks ago, our flash poll, you guys buying this blip above 30 in VXX and much north, around 14, pushing 15 in VIX Cash. A lot of you actually said you were buying that. You were leaning higher. Unfortunately, at least for you guys, not coming to pass out here. Way back below the 30 handle in VXX, way back below the 14 handle in VIX Cash. Of course, the question on everyone's lips and minds, and in the trading worlds, we'll get to in a little bit, is that will that persist or not? Mark, you kind of alluded to it before, but before we get into all the rebalancing and silly fun stuff, what's catching your eye this week from a volatility perspective, sir?
Just the utter destruction of VIX, the dumping of, and then VIX vol took it in the chin. There was a customer that splashed basically every contract in October. And then what I'm surprised by is November, which is when kind of the elections are, things like that. That premium's really cheap. And then, today, and I thought this was kind of funny, there was a huge VIX call buyer, but, in December, which is like the one time you wouldn't think, which is the one area where, people usually don't want vol. So just all in all, a crazy, crazy day. Lots of interesting trades, though, that went up in VIX and in VXX that we'll get to talk about. There was a big, huge November risk reversal that went up. There's like those December calls. And so a decent amount of, it seems like volume, at least size volume, now that we've been low for about a week straight, is starting to gauge some interest in hedging. And how about that settle? We had VIX settlement this week. Lowest settle since, I think, December?
Yes,
maybe
it is.
January.
And I'm curious your thoughts on that as well, because obviously these days more than ever, a lot of eyeballs on that settlement. A lot of lawyers' eyeballs on that settlement as well. Were you feeling any flim-flammery, tomfoolery this time, or didn't seem as crazy as, shall we say, recent?
It was a nice print. I mean, we settled 1194 from like a 12.5 the day before, but the market was up, and it made sense. It made sense. It did not seem outlandishly low or high. Quite honestly, it felt like there was going to be a low print. I did see a lot of 12.5 put 1x2s and put spreads bought on Tuesday. I personally was bidding a nickel for the 12.5s myself and almost paid up a dime on them. Almost. and I chickened out. Would have been a nice winner. As it was, in our vol fund, I ended up owning some 12.5s that I owned kind of for free, and those ended up settling 56 cents. So a nickel turned into 56 cents. That's, I don't mind stumbling into 27 grand. That's not terrible.
There are worse things. That'll buy you a few Gibson's dinners over there these days.
Well, it's my customers' money, not mine. So I can't go off and, as much as I'd love to go buy myself a Gibson's dinner.
You can buy me a nice Gibson's dinner. $27,000. That'll get me at least through the appetizer round. So that'll be be good on there. But you're right. It is a lot of interesting stuff to parse. We'll get to a lot of activity in a little bit as well. Yeah, you're right. The settlement, like I said, I was joking, but a lot of eyeballs on that. We'll get to some new things that they have. Their processes they're putting in place to kind of monitor that as well. But I think they all know that if they get a wonky one this time, the lawyers are already out and on the hunt. any crazy standard deviation away from expectations is going to just add to probably some costs they're going to have to pay at the end of the day. But you alluded to it at the top of the show. I want to get to it. A lot of people are running with this today. Mark, we get this, every quarter or so. It's kind of the big. I think a lot of people like to talk about it because it sounds cool. It sounds sexy. Quad witching, quadruple witching. Oh, witching. That just sounds so cool. We've kind of debunked that a lot before on the show. It's not quite maybe as cool. It's kind of like Max Payne. It sounds a lot cooler than it sounds like it has a lot more impact than it probably really does. So we've kind of debunked the quad witch before. All these options and futures all kind of expiring around that same time. But there is a little bit more juice going in today than usual. You mentioned you got, your quarterly S&P rebalancing going on there as well. We also have after the bell today, we've got S&P and Dow Jones going to reorganize a bunch of their indices and sectors. MSCI part of that as well. They're going to they're going to switch things up, reorganize. Relaunch their telecommunications index as a new communication services sector. What that means is they're going to move a bunch of names around. So that's about 2%. Their telecom sector right now about 2% of the S&P. It's going to have roughly 11% under the new tag, the new index they're doing. The technology sector is going to go down from 26% down to about 20. Consumer discretionary drop from 13 to about 11, and S&P doing this quarterly rebalancing. So a lot of things going on here in the markets. Of course, some people saying this was announced a long time ago, so it shouldn't be too dramatic. But still, this is maybe a little bit more than your typical quad witch, which we've seen come and go a million times, Mr. Meatball. So are you getting the sense? I mean, we're not seeing it on the screens, but are you getting the sense maybe that there's anything more afoot than in your typical quad witching this week, sir?
No, it seemed pretty normal. I didn't see anything kind of crazy in what was going on at all, frankly.
Yeah, that's kind of the sense. It's just so funny. This is getting so much ink, and people are hitting us up about it that we had to kind of at least address it. I wanted to get it there at the top of the show because you're right. It's not, but I wanted to put it out there, for our listeners who are like, ooh, quad witch and reshuffling and all this other stuff. It might drive some volume in those products, but it's not typically a massive structural driver of volatility out here. And we're certainly not seeing that being exhibited again today, as we're mentioning most of the major gauges of volatility taking it on the chin. Yet again, you mentioned VVIX, our old friend VVIX, a.k.a. the volatility of VIX, off about 4 handles down to about 87. So we're shy of the 90 handle. Remember, not too long ago, we were well north of 100, now back to about 87 as we're kind of settling into this erosion to the downside type trajectory we seem to be on here out in the world of all things volatility. And looking over here at the VIX futures term structure, which, as we've said, we've joked, only not really joking, have jokingly on this show many times over the years said, the answer to all volatility questions can be found somewhere along the VIX futures term structure right now. We're seeing as that cash comes in. Of course, you got SEP off the board, so you got the OCC future in there, which has a little bit of juice more to it, a little bit more premium than that contract that kind of just went away that was tracking, obviously, a lot more. So we got, looks like about 2.6 handles between the cash and the OCC future. Cash right around 11.30 right now, and the OCC future right around 13.90 or so. And we got a little bit less than a point out to Nove again, so you got about 3.5 handles out there to Nove future. Mr. Meatball, anything catching your eye worthy of note out there in the VIX futures term structure this week, sir?
Yeah, I mean, you definitely have, OCC and Nove and December. Nove and December are really flat. October seems a little pricey relative to some of the other relative to cash, let's say. But other than that, the structure is actually pretty flat. Certainly, it's flat in between November and December. But you kind of expect that every now and again, right? When we get December is usually at a slight discount to the cash. That happens often. So that's been about it. And Mark, actually, you know what? I don't know if they want me saying this or not, but I actually got called in to Cboe this week, because they're working on doing a better job of reporting imbalances, on settlement. They're really trying to get that information out there as best they can, because their argument is that it's not nobody's gaming it. There's an information problem. People don't know when there's a need for extra liquidity. It's not a bad argument. And so I got to kind of look at what they're trying to put out on Bloomberg and what they may put out on LiveVol. And I think based on what they're doing, I think they're making a good faith effort to provide to customers what they, provide what is needed to the traders and investors such as myself.
Yeah, like I said, we've been champions here from the beginning in more transparency in this process. That's all anybody wants, really, right?
Right.
That's something if it's a shame that it took lawsuits and everything else to prompt a lot of this. It probably should have happened, 5 or more years ago. But still, it's happening now, which is a good thing. You kind of brought it up, so we'll get to it now. The also some headlines coming out this week, which is kind of interesting to me, kind of funny. Kind of combining some of the big buzzwords of the space. Cboe trying to hit this notion of transparency, and I get why they're doing it. They were reaching out to, I'm not sure if this was Reuters who put this out here, but they're talking about they're working with FINRA, which is of course their regulator, the person who oversees a lot of these settlements and processes, and who's also kind of in the hot seat as a result, to develop what they're terming machine learning techniques. To tell whether market conditions surrounding the VIX are potentially anonymous. Yeah, this was Reuters they talked to. So they're talking about they're using machine learning and AI to try to enhance their overall regulatory program. Now, a lot of this, of course, is kind of putting some buzzwords out there. Machine learning, that could be anything. That could be like the approach you've seen a lot of times of just pattern recognition. Here's patterns in the past of what types of behavior, how they went up. Have the machine learn them, develop the pattern, and try to recognize that pattern going forward. It's very basic stuff, but it sounds cool. It sounds sexy, and the AI thing could be a little bit. They don't mention any concrete things they're doing here to actually get this going, but it does sound cool. I think you'll agree, Mr. Meatball, that the computers are policing us now. Does it make you feel better?
Yes. Oh, I mean, is there anything sexier than AI?
Hey, maybe we're closing in on RoboCop. What do you think?
Yeah, no. How cool. AI, artificial intelligence. Ooh, how cool.
Yeah, this is an article that reads more like a press release for some buzzwords, but it doesn't really say a whole heck of a lot. But a lot of people are curious about that. And you're right. These are all efforts that needed to happen. I'm glad to see that they're happening. Again, I kind of wish they happened a little earlier, but c'est la vie. At least at the end of the day, I haven't seen any of these notices. They're talking about these notices going out. I haven't seen any go out for imbalances. Have you received any or seen any?
I saw a makeout. I saw the makeup of what they're trying to get out and put together for a Bloomberg terminal, and it's nice. It will work. So there's that.
Yes, I mean, if they get it out there, I think this kind of also kind of puts the lie to this notion that, there's this grandiose conspiracy at the exchange level to defraud people. That's just silly, But the lack of transparency certainly was an issue, and it seems like they're kind of trying to rectify that now.
Yes, and I'm not saying that I don't want to say that there wasn't some people that weren't trying to mess with settlement a little bit here and there. I don't want to say that because it could be. But what I will say is that the idea that the exchange was complicit to this is utterly ridiculous. And so if there are any bad actors, the idea that Cboe was a party to this or is sitting by idly is outlandish, in my opinion.
Oh yeah, there's people trying to game every system, right? They're out there,
right?
That's not a surprise. They're not under the Cboe banner. I think is what that's what all the lawyers are alleging. That seems on the surface to be kind of just silly.
Yeah, well, they want the big money, and they don't know. That's what it comes down to.
Yeah, exactly. They see a publicly traded name, they see dollars.
Yeah,
let's go after that rather than Joe mysterious random fund that we don't know. So yeah, interesting stuff. Speaking of Cboe, they've been highlighting a lot these days. This is one you can kind of also take with a little bit of a grain of salt, but it's interesting nonetheless. We talked about it before. I haven't talked about it in a while. Our old friend, the SKEW index, which is disseminated by the Cboe. We'd like to see it disseminated more frequently intraday. It's kind of one of these kind of once a day, indicators that they put out there, and it has this kind of bizarre quoting notation where they quoted in like 150 down to 125 or things, and it closed this Tuesday. The number came out, so it may actually be more than this now, but they were touting it on Tuesday, having closed above 150 for 4 straight days. That's the first time ever, apparently, which seems surprising. It seems surprising that it hasn't closed over 150, but c'est la vie. This is from the horse's mouth itself saying close 150. We talked about a little bit about this on TWIFO yesterday, looking at, the E-mini and the big S&P options over there at CME and seeing what's going on in the SKEW. So we talked about that a bit. Check out the TWIFO. And indeed, check out the Quick Strike tools because that actually measures. Their Quick SKEW tool actually measures. Because the problem with SKEW indexes is kind of just one number. And as we said many times, there's 2 moving parts to SKEW. So the call wing gets crushed, that's going to affect the number. If the put wing gets bid up, people look at that number, they automatically assume puts are rich. That's not exactly the case, and so that's something you need to check out. Mr. Meatball, are you does this have any bearing to you? Have you been paying attention to these record 4 days of SKEW over 150?
Yeah, we were talking about this the other day. I was talking about this on TD Ameritrade the other day. When you see the SKEW like this and VIX is low, what that tells you is you've got people going out and buying a little crash protection, but it's not not the type of thing that tells me that people are like inherently worried about what's going on. VIX rallies when people are inherently worried about what's going on. SKEW rallies when people are just buying some crash insurance, which is what we appear to be seeing right now.
Are you plugging some proprietary network on my channel, sir? How dare you? How dare you do such things?
Well, when you get in TV, you can hire. Then I don't have to do. I won't plug a proprietary network anymore.
These limited networks only go out to their own customers.
Are they any different than CNBC or Fox? No.
No, all the same.
It's all the same.
But hey,
if anything, they maybe are a little better.
I love seeing people actually see the value of content out there and put some effort and money towards it, which is always good, because that's kind of what we do at the end of the day. So that always brings a smile to my face, even if they are, shall we say, liberally boring from what we do here on a regular basis. I'm teasing, of course. All right, let's go on. But since you're talking about SKEW, let's hit on it really quick. It's kind of a fun nugget. We talked about these before. People like these. Since all these people are hitting up about SKEW and everything like that, we did some searches out there. We did searches of searches, a.k.a. the Google searches, to see what people are searching for. And we did some very basic terminology that your random Joe on the street may search for if they're looking to hedge themselves. So, for example, the terms like stock market hedge. And we went all the way back to 2004 on that one. And obviously, top of the list came right around October of 2008. That, of course, is no surprise to anyone. That's the 100. But they go from 0 to 100 on these scales. The 100, the kind of burying the needle part, is Oct 2008. Number 97 is a lesser probably thought of time, August of 2007. 95 on this list is December of 2004, which is where then it kind of trickles down April of 2016. February of this year is not even that well represented on this list. And as where we are right now, we're not quite half of where we were in October of 2008, a little bit more, about 58. But it has been ticking up recently. It's up about 10 handles or so in the last few weeks. So that may be showing perhaps this broad interest in the public. We also search for some other terms people might like to search for when they're hedging themselves, like portfolio protection. And a similar thing there. The number is a little bit different there. The pinning the needle top of the list for that one was March of 2007. This is data going back to 2004, listeners. Then 99, so right behind it, was February of 2005. And then 90 on that list of 0 to 100 was March of 2017. So February or October of 2008, I should say, is a lot lower on this list, which is a little bit surprising. And also February of this year, also not getting perhaps tons of love, which is, again, two things that are kind of surprising. But right now we're at about half, about 51. So, and that also has ticked up substantially in the last few weeks. So I don't know. Anecdotally, at least, Mr. Meatball, we got SKEW inching up. We've got Google searches inching up. So I guess we can categorically say here on the show that the end times are upon us. Would you agree?
Oh, yeah, for sure. End of the day, end of days.
I'm scared. Zombie apocalypse. Dogs and cats living together. Mass hysteria. Let's get to the big mothership. Let's get to the VIX options. That's what everybody's here for. Let's talk about some VIX. And it was an interesting week as we're talking right now. We're at about 11:30 or so out there in the cash land. We're averaging about 467,000 contracts a day here, doing about 327 on the tape right now. So pretty robust. We'll probably be threatening that ADV, about 3.1 to 1 calls over puts. The OI actually coming off a little bit, about 2.8 to 1 calls over puts. So all of you who get nervous around such levels can take a bit of a break. You know who you are. Thursday, we did about 410,000. Wednesday, of course, the big driver of the week, almost 1,988,000. Tuesday, also pretty active. People like to get in the day before. 846,000 contracts going up there. Monday, 495. So the ADV getting a few good boosts out there. In terms of the big strikes, the hot VIX, the big top bananas, Mr. Meatball, you know what trades are going up this week. If you had to guess how our top 10 looks this week, if you had to pick some months and strikes that were up there, what would you guess?
Oh, I'm going to guess it's the I'm going to guess that it's the OCC 20s.
It'd be NOV 20s.
And OCC 30s.
Our old friend, that big risk reversal print that's been going up, was going up before. We talked about it before on the show. Going up again this week is kind of just dominating our top 10 here. Of course, our old friend, the OCC 13 puts, he continues to pile into that strike. We're threatening 500,000 open there now, 494,000 for our number one spot on the list. Then we drop off a bit to the NOV 20s, and you can guess what's right behind it, the NOV 26s. Yeah, it's part of that vertical that's been going up, that risk reversal. 304,000 on the NOV 20s, 223,000 on the NOV 26s for 2 and 3. Number 4 is the OCC 25s, 201,000. Number 5, the OCC 21s, about 200,000 open there as well. Number 6, our second put on the list, the OCC 12s, 191,000. Number 7, the OCC 18s, 181,000. Then we drop off again. Number 8, all the way out to Dees 47.5. This continues to be a strike which has some attraction to people. 169,000 open out there. Number 9, OCC 28s, $144, and around now our top 10. The OCC 17s, 134,000. Total of about 6.8 million contracts open, about 5 million on the calls, and about 1.8 million on the puts. A lot of paper going up this week. Mr. Meatball, what was catching your eye out there in VIX options land, sir?
You know, the biggest trade I saw was December. Today, customer did the December 20 call, about 75,000 of the December 17 calls for $1.70 tied to futures. We saw a customer do a lot of the November risk reversal, so that the 2026 versus the 13 put. We saw a VXX trade where they sold the October 59s and bought the November 35s, I think. It was either the November or the December 35s. So those were kind of the big VIX trades that I saw this week. I don't know. Trying to think if there are any other huge ones.
Yeah, you're right on the calls there. The D's calls, the D17s doing a fair number, shall we say. I think it was something like 118,000 last we checked. Let me check if that number has changed at all. D17s, 118,097 on the tape as of right now, going up in big chunks of 36,000 or so for $1.70, then another 10,000. $1.70 seemed to be the print for a while there. They were kind of fighting around that strike, $1.70. That was their price. As Jerry mentioned, they did it with futures. 118,000 going up on that strike, all on open interest of 30,000 contracts. So clearly opening there. This is kind of a bit of a theme. Mark, we were talking about before, Deese is not usually a period that seasonally is known for a lot of robust volatility. Yet you're right. People are piling into that portion of the curve lately. I know people are talking about midterms and stuff, so maybe people don't want to mess around with timing. They don't want to just buy D so they get it all. But I don't know. Does this kind of strike you as odd, sir?
Yeah, well, it was tied to futures, and D's falls low. It could just be the concept that, hey, maybe volatility is too cheap maybe volatility is a little too cheap in December, and maybe the spread between D's and Nov is a little too low. That's what I'm kind of thinking, is that someone is playing the vol is too cheap in December, or the December futures too flat, because that would be why you would tie that to futures.
Yeah, I guess if you're going to go bargain hunting somewhere on the curve, right, I guess D's is not a bad choice.
Right.
You got some room for an argument to be made there for value. So I could see it on that perspective. It is just a little bit odd. We don't usually see this type of size D's love or just D's action that much this early. Again, there's a lot of aberrant factors at play this year. We have potential drivers of vol in terms of the midterms and everything else coming up. So that could potentially be doing it, but still interesting. We'll flag that in the interesting category, and certainly size-wise. It was an interesting one out here. Also worth noting, Mr. Meatball, the ratio, the short ratio is going up again. People must be listening to the show and they say, 1x2, that's for cowards. Let's go, if you like it, let's go big or go home, right? So let's go 1x4. That's what we saw going up here this week. It was the Feb 2037 half 1x4 call vertical. Not quite 10,000, 9,800 times by 39,200. So pretty much 1x4. Selling the one for $1.58, buying the four for, what did they do it for? 44 cents out there. So actually paying a little bit on that one, but not a ton. This seems to be a trend, Mr. Meatball. If you like 1x2, then you got to go 1x4. I think we've seen 1x6s. It's just funky ratio land. Are you buying these? You liking these funky, increasingly levered ratios we're seeing going up?
Oh yeah. Well, how can you lose? It's like free money from the internet doing that trade. Yeah, I don't know. I think with it makes sense. With how high vol had gotten, it kind of makes sense from that perspective, but not from a. I does not make as much sense to me from a VIX futures level. I think I don't know that I like the price point there with where futures are. That I actually like that trade better when VIX is really high, as opposed to low.
Yeah, we said that before. That's when you have a better chance of that actually coming to play, right?
Right.
You won't be getting the same price levels, so price-wise it might be a little bit more attractive, but payout potential-wise, I think you're onto something there. I think there is.
Well, you can make money a lot faster on that one because the SKEW gets really jacked when VIX is high, and that's the real value in that trade.
We said this
right?
before too. I think I was talking about it last week. You saw more of these types of trades going up, and I'm still uncomfortable with, because when you get these funky ratios, you got to kind of widen it out to make it make sense from a premium perspective, right? But so they start making these strike choices that I think you could maybe question. Like this one is what, 17.5 handles wide. There's a lot of room in the middle there for this thing to go in your face. The reason why this thing used to work pretty well is they kept it pretty tight, right? It was near out of the money, selling one near at the money call. You're buying two more, usually a little bit further out. The ways that could explode in your face were kind of minimal. You know, you could take it on the chin if you didn't really kind of got a little bit of some drop or things, or if it kind of went through that strike a little bit, it could maybe hurt you a bit. But there wasn't a lot of room to wipe you off the map. This thing could wipe you off the map very easily in a lot of scenarios where those 37 halves aren't even a factor and the 20s are really hurting you.
Yes,
I don't agree at all with these crazy wide mega lever. Maybe people out there do. If you do, hit us up, tell us why you like these things. But we're seeing a lot of these right now, and this is, I don't know, it's making me, shall we say, a little bit uneasy. That there's a lot of scenarios I could think of top of my head where this guy is deeply regretting his choices on this trade.
Yes.
Speaking of deeply regretting, it's kind of interesting. A lot of people were all fired up about these risk reversals this week, Mark. They were hitting us up left, right, and center. We talked about them last week, of course. It was the OCK puts with the NOV call vertical. This week, it went up more. This, I think, was around Wednesday. This time with the OCK put spread, so it's kind of a put spread versus a call spread. It was the OCK 1213 versus put spread versus the NOV 2026 call spread. I did it around 100,000 times. I think there was actually more going up total. But yeah, it was at least 50,000 going up at a clip for these things. So there's a lot of people have pointed out, like Pat Hennessy and a few others hitting us up. I don't give them all credit, everyone who has hit us up about this trade. Yeah, we saw it, but we like to give credit to our listeners. But people have been chiming in about this. This trade, I think we talked about it last week too. I don't know if you checked. I checked with a few people, and I heard kind of mixed things. Did you check? I don't know if you checked any of your brokers. We kind of questioned the way, I forgot who it was who they said they put it up. They were talking about it as a bullish risk reversal. The execution seemed to...
It's not a... It is a hedge, but it's not a bullish risk reversal. It was they sold put and bought call.
That's what I mean. I just mean structurally wise. Yeah, it didn't seem like it at first. I think we kind of questioned that a little bit. We certainly would want to maybe talk about leaning the other way instead. But it did look like it went up that way with that sense. Yeah, bullish risk reversal hedge, call it what you will, but it did have that upside bias / lean to it, which is something we were initially questioning, but a little bit deeper investigation. Again, with the executions in VIX land, you always have to do the extra due diligence, which we did. And it does seem like it went up that way, which is interesting. Again, maybe not the way a lot of people would put it on, but that's the way this guy's putting it on. And people are already hitting us up. What was it? Darren Hom here sending us the VIX futures term structure, because this guy clearly, at least on this one option side of the trade, obviously he has other stuff going on, and this could be a hedge of some short. But still, this guy's asking if a lot of this isn't already priced into the VIX futures term structure at the time he sent this to us. Let's see, looks like the no futures right around 15, D's a little bit higher. Jan getting up, threatening 16 or so, Feb over that level. So he's kind of wondering if if this guy is kind of, it's already priced in, so he's putting this trade on for kind of naught. Another guy here, Greed Cap chiming in saying there's another guy just betting on more vol for the midterms. Everybody and their stepmother is doing it. Yeah, there's some of that. He kind of doubts if this guy was hedging, he wouldn't do a double vertical spread, would be a simple call to put. No, that's not the case. I could see why he would want to sell that put and sell the call to reduce the cost of doing this whole thing. But yeah, also maybe given the continued downside on VIX land, maybe why he'd want to add that long put leg to this extra second edition he's doing this week. So I don't know if I agree with that one. Other people chiming in. A lot of people chiming on this trade. We don't have to save it for vol voicemail. There's just too many. Oatmeal Pawns. I like that name. He said if VIX futures get crushed to 12, this guy is going to lose approximately 10 million near expiration day. Maybe he has much bigger stock long positions to cover those 10 million losses if that does happen, though. So I don't know, a lot of debate around this trade. We kind of debated it a bit last week, Mr. Meatball. Has your reasoning changed on it last week? Have your thoughts evolved on it? Or are you agreeing with any of our listeners here who are also seemingly up in arms about this trade?
I think it's a great trade. What's wrong with it? I think it does what it's supposed to do. This is a hedge against an equity portfolio, likely. And, there are a million ways to design a trade. I don't think this is designed poorly. I do not. So, God bless him for coming up with in his mind, an inexpensive way to hedge.
Send your angry emails to marketoptionpit.com. Don't send them to me. Send them to
Correct.
You guys are all fired up about this one. We saw some more crazy wide verticals going up out here in VIX land this week as well. OCK 2450. Let that sink into your head a few times, Mr. Meatball. 2450, 7,000 times. That went up, I think, earlier this week. 2450. That's I think your counterpart, Mr. Rock Lobster, at that point would say, "Why sell the 50s?" But someone did.
You'd be surprised how much juice you can get out of the 50 calls. I mean, that's why there is so much curvature up there that the fact that you can get anything out of the 50 calls when stuff is this cheap, with the VIX at 11, it's actually not a terrible trade.
Yeah, I guess if you look at the numbers here, he got 8 cents for those, which is surprising. So for the net spread, he knocked off about a third of the cost of his, close to a third of his outlay of the trade by doing that. So there is some financial motivation to do such things, even if it does look silly at the outset. Let's go on to our friend here, VXX. A lot of you like to trade this one as well. We got, what do we got here? VXX, yeah, taking on the chin again. We talked about it earlier, off over a handle from this time, showtime last week. We're averaging out there right now a little bit shy of 250,000 a day, about 234,000 contracts a day, and a pretty robust week this week, about 350 on the tape yesterday, 201,000 on Wednesday, 239 on Tuesday, and about 210 on Monday. Let's see how we're looking going into the end of the week here. We got about 200,000 on the tape again today. So probably a little bit north of the ADV today. Top positions, we all know, the 10 puts, the 15 puts, and the 5 puts in VXX getting it. By the way, Mr. Meatball, they went at 2 cents briefly this week, your 10 puts. I know your mouth was watering there.
I know. I actually did I think your listeners are going to like this one. I actually did a pretty decently sized VXX trade in January again this week in our Vol Fund. I don't know if you'd like to hear about it.
Regale us, sir, with your tales of VXX trading.
I will. I bought 5,000 of the January 17 puts, and to finance it, I sold 2,500 of the January 18 puts, and I paid a net 2.5 cents for that spread. And if you look at the way VXX is moving, I really like the way this is structured. And then I'm going to slowly, over the next couple of weeks, be dumping out of, I have a decently sized long position at the 25 strike in January that I'm going to be exiting over the next couple of days and weeks.
So give us those strikes again.
I was short. I sold 2,500 of the 18s, and I bought 5,000 of the 17s, what is sometimes called a put 1x2.
Yes, sometimes. You said it kind of backwards, but I was like, wait a minute, what did you do? Okay, that makes more sense. I was like, wait a minute. So, I'm doing 5 things here, and I hear your trade come across, and I was like, that doesn't make sense.
It was a nice, I think it's a nice trade. I think you're going to like it.
Yeah, I think there is a good argument for some of these put 1x2s out here in names like VXX, because you get that nice kick from the top, but the bottom one maybe not so much yet kicking in, so you can kind of get a little bit of a juicy juice, to use a technical term, out of those out there. Speaking of puts out here, I'm looking at the top 10 here in VXX. There are some on right now in our top 10 that clearly missed, unfortunately, for these players here, like the SEP 24 puts. Those are still open right now. Those are pretty much gone the way of the dodo. You can buy all you want for a penny right now. You can buy all the way up to 25.5 for a penny right now, listeners. And those are, there's 57,000 open of those. So if you're complaining about maybe some of your ouchies, at least it's not 57,000 worth here. We also got the SEP 28 puts. Those are actually in the money right now and looking all right. They're trading about $1.60, and yet there's still about 46,000 of those open. Only 4,000 going up today so far. So apparently our friend not wanting to take those off the table wants to ride them into the oblivion and get himself some shortness, I guess. Interesting call there. Most people probably would be closing those, but our friend here not so much. Also 34,000 of the SEP 22 puts still open, Mr. Meatball. So yeah, there's a lot of pain to be felt in VXX right now. So if you're concerned, you're feeling bad, maybe something's not working again for you, at least you're not 20 to 50, 60,000 contracts against yourself. In terms of the big VXX trades hitting the tape this week, upside getting some love here. The no 45s actually looks like they're selling these 62 cents, 10,600 times. That one going up today. Also, yeah, put 1x2s. You're not alone, Mr. Meatball. Another one going up today in Dees. It was the Dees 2023 going up 2,400 by about 4,800 times. Looks like paper, I would assume, buying that. But I don't know. Do you like Dees 1x2s as well on the put side, Mr. Meatball?
It makes sense. I don't like putting out, when I do these little VXX plays, one of the keys is to pay as little as possible. And so I'm always on a mission to get this stuff for as close to nothing as I possibly can.
Speaking of getting stuff for nothing, or quite close to it, it's like I'm going to these, but it's like you're setting me up here. But you like your flyers on the Jan 10 strike. We got more VXX put flyers going up this week, Mr. Meatball. Not in Jan, not in Dees, not even in Novarock. Nope, we're going back to SEP, this time in the weeklies. SEP 28th, expiring the 22 puts, Mr. Meatball, going up 33,000 times for a penny yesterday. So that's the mother of all flyers going up here this week. 22 strike. What's your? This guy's probably not too happy. He can buy pretty much all the 23s he probably wants at that price right now too. So far not looking too good. What do you think about our mother of all VXX downside flyers here, sir? Size money chasing this downside still in VXX.
I mean, you see it all the time. It's unbelievable, but yeah, happens all the time. And,
so you're saying here definitively that was not Carmen line. That's what you're saying.
That was not me. But it's a lot of those flyers. I mean, I was literally looking at the 26 puts for 2 cents today. And those that expire today. And those are cheap. And I thought to myself, that's not a bad idea. It could work. So, there's a lot of people that want to do these flyers, and for a good reason, because they can make money. You only need to hit on one or two of them, and you're a happy camper. You're a happy camper.
33,000 times for a penny. If he gets trace cents out of those,
he's
doing good.
He gets 10 cents one time, and he pays for his entire, almost his entire year of doing these.
You think there's an entire fund out there just devoted to garbage downside in VXX?
I don't think that's all it does, but I do know that there's some guys that are involved in that stuff.
I like the mental picture. I want a fund that just does that. That's all I want. I want to see this guy.
Right, well, you should start it. Why don't you?
This guy in some dingy office somewhere, just long all the wings, all this garbage nonsense. I love it. I love that vision. I have like an old 40s era Marlowe detective style guy in my head for some reason, in a trench coat, puffing on a cigar, saying, "I got to buy these puts for a penny." I like that image for whatever reason. Let's keep picking of images in our head. Let's see what you guys can conjure up. We had some earnings this week. Not a lot to talk about there. Oracle and FedEx popping off this week. If you want to see what's going on, you could check out the earnings move results report we have on the website, the option side, courtesy of our friends over there at Orats. FedEx, I believe, was the bigger mover of the two. They're pricing in about $8.5 bucks. I think they ended up moving about 12 something, 13 something. So outperforming there. Oracle, kind of the opposite, kind of did nothing. 60 cents, they're pricing in nearly $3. So premium writers winning. At least this is again right after the earnings. This is not the rest of the week, so things move afterwards. But in the initial blush, Oracle premium writers winning there and premium buyers winning in FedEx. That's the narrative for earnings this week. Let's keep on rolling, see what you guys got on the brain. It's time to check out the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right. I already cheated and bumped up a bunch of your questions because so many of you were fired up about that VIX risk reversal out there. But we got a bunch more here. Really quickly, I want to get to our question of the week here as well. We've been playing along with this kind of SPY downside question all week. Or I shouldn't say that. SPY position question. I don't want to tarnish the results. We asked you, what do you think is the biggest open position in SPY right now? 4 choices: March 255 put, OCK 272 put, DEES end of year 31st 320 call, or a SEP, straight up SEP 300 call. Mr. Meatball, I'm not sure if you had a chance to play on this one. What do you think is the biggest open position in SPY, at least as of the beginning of this week? And also, what do you think our audience is picking?
The 270 put.
The 272 put? Interesting.
Yeah.
That's not a bad guess, especially given all the headlines in the SKEW, right? You might assume that
right.
at first blush.
Yeah.
Actually, I'll tell you how it's breaking out right now for our audience, and I'll tell you the answer. The audience is picking ever so slightly the DEES 31st 320 call with 34%. Hot on its heels, your pick, the DEES OCK 272 put, 32%, 18% for the SEP 300 calls, and 16% for the March 255 puts. And actually, the calls have it, Mr. Meatball. I'll just reveal the answer here.
Really?
Why not? The calls are winning, are the number one position. DEES end of year 320 calls, the biggest open position in SPY options.
I guess that makes sense with what's been trading in SPX, right? You know, with that all that upside. Although there was a massive OCK, I want to say either OCK or maybe next one of the OCK weeklies. A customer bought the 2850, 2750 put spread for size yesterday, like 45 or 50,000 of them.
Oh, so that's why I said by
beginning. Messing around.
That's why I said by the beginning of the week, because these numbers could change obviously by the end of the week.
That was in
SPX, yeah.
SPX,
yeah, but you'll see
that's
some,
where the institutional money is.
Yeah,
so.
You'll obviously see some spillover eventually into SPY from that as well. But right now, as of our poll time, it was the upside, the DEES end of year upside, 320 calls. I forgot the exact number, but it was a substantial number one out there on the list. Let's get some other quick emails, you guys here. Tommy. Just Tommy, like that, responding from our show last week. Our show title, I think, I said something about debunking VXX in it last week. And he took that literally and sent us a chart of VXX and says, by the way, what is this? It's VXX. Yeah, we didn't mean that literally, that we were debunking the existence of it. We were joking in that we were debunking some trades in VXX. That's what we were doing. So yes, we agree with you that VXX exists. Well done there, sir. Our audience sometimes, Mr. Meatball, kind of literal. He also sent in... he sat in a paper trade all weekend from 12, where it closed at 12:07. Volatility won, Trump lost, prison next. Well, okay. Political commentary aside, I guess that was kind of a scratch for you. But yes, don't be so literal next time in reading our headlines there, Tommy. Let's see here what we got. Godfree 3Y, whatever. Handle. It says, I'm long VXX from 28.30. All right, so a little bit of an ouchie there. You're off about 2 handles there. He says he's long the Jan 25 puts from 55 cents. A little bit better there. Those are probably like 30 plus 35 cents or so in his favor right now. And then he sold the OCK 05 in the weeklies. So OCK expiring on the 5th, a weekly, so a couple of weeks there. 29 half call for 56 cents. Thoughts? Should I just scrap the shares? Interesting. Obviously the shares are what's dragging him down a lot. The puts look good. The calls, obviously you need something against those calls. Your broker's going to keep a lot of cash, and maybe you got the shares. It's kind of a covered call trade now anyway here. Well, obviously not with the puts, but still, at least he financed his puts. The puts looking good. I don't know. Are you a fan of unwinding those 25 puts here, Mr. Meatball, and then maybe...
If he's got a good rate, what's the ratio of stock to the puts?
That he does not share with us. I do not know. I'm going to assume it's 1-to-1, maybe.
If he owned the puts on a ratio, I would like this trade a lot better. So if he owned a couple of those puts and then one stock and then financed calls with it, I think that's not a bad little VXX trade. It makes sense because you're taking advantage of that vertical skew. You're taking advantage of the drag in VXX. And you're taking advantage and you're in a position where if VXX really does rally hard, you can do extremely well.
Yeah, I don't mind having some of the underlying at this, particularly against this. In fact, there's a related question here. I want to get to it because we're kind of running out of time here. This comes from Piers. A similar question. He says, I'm long a bunch of VXX puts. That seems to be a theme with our audience. He says, I'm wondering if it is cheaper to buy VXX stock rather than the out-of-the-money calls to hedge against vol spikes over short periods. He's very specific. Over short periods like weekends or a few days. The underlying isn't going to suffer the same theta as the options, and you get more deltas. So it sounds like this guy is in a very similar position to our other friend, Godfrey3, whatever the name was there, except he doesn't have the call overriding on it. But I could kind of see, especially for the short periods he's alleging, that might actually not be bad because, we talked about this before. You got a lot of issues with those calls, and you could certainly have erosion in the underlying VXX as well, but I think the short holding period is kind of a good defense against that. Would you concur?
Yeah, when I'm setting up a short dated option in a short dated trade in VXX, I do use in the money calls primarily as my the way I develop my hedge. It's actually kind of the de facto the same thing, right? I'm long I'm long these calls, and it still costs me less. So the last time I felt like putting on a hedge, I owned the September 25 calls for 580 when VXX was making a run back at was above 30 the last time. I got out of them at like $5.20, so 860 cents on my hedge. But who cares if you eat 60 cents on your hedge if the other half of your position is winning, which is what happened here.
Exactly. So I think we're both saying we like this. I mean, you can go that way too. In the money calls, kind of the same thing. Half dozen one, 6 the other. A little bit, maybe a little bit less expensive to go the call route. Depends where you go, obviously. But yeah, both perfectly viable approaches to doing it. Particularly if you're playing that VXX downside, you got to have some plan for when it goes against you, and that's not a bad way to go. All right, let's keep rolling into our final segment. Time for the old crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Coming into here, the end of the show here, and I am exactly a quarter of a handle off. I was 1167, we're at 1142 coming into this segment. So quarter of points, we usually say about 0.1 is the bullseye range, so not quite a bullseye, but not too bad either. I'll take it. 0.25 away in the old VIX land. Mr. Meatball was about 0.9 away, almost a full handle away. He was 12.15. That's what you get, Mr. Meatball, for just rinsing and repeating week after week, sir. It's gonna mock you sometimes.
Yeah.
Sometimes it comes back to bite you. So here we are. We're at about 11:41, 42 or so right now. So this time next week, where shall we be? I shall go first, of course, as the I should start tallying these victories in some sort of spreadsheet, so I could rub your nose in it later on in the year, sir. But I'm not that kind of guy. All right, let's go on to what we got for next week. 11:41. We're mentioning so obviously a lot of paper. Specking on some upside in VIX land. Obviously, the VXX downside continues to come in. So you kind of have a tale of two cities there. You can kind of pick whichever side you want. Hence, we have a market, which is kind of nice. All that a long way around to saying, continued aggressive downside in VIX land is going to be increasingly hard to come by. We talked about that with the Rock Lobster before and his myriad VIX zones. There's only so much juice you can squeeze out of this orange when it gets down to this level where it's already been squeezed quite a bit. It can go lower. How rapid that will be is the question. So all that's a long way around to buy myself some time to say, I don't know if I might have some blips higher this week, but I don't know if I feel aggressively higher this time next week. So I'm going to come in and say a little bit south of where we are right now, 11 and a quarter in VIX land. Mr. Meatball, I bought you some time there, sir. Have at it. What are you thinking?
Well, what did I guess? What did I guess last week?
Don't do it. Don't do it again. 12.15.
All right, I'm gonna bet 12.14.
There you go. There you go. The in-depth analysis we've all come to expect there, sir, from the greasiest of meatballs. All right, listeners, unfortunately, that music means we've come to the end of an epic journey through the world of... What's your prognostication for VIX land next week? It's a hard game we play here. You guys like to play along at home. If you have a mockery for the meatball, send it in. If you have your own pick, send it in as well. Good ones will play. Silly ones will play as well. If you send us a 50, it's kind of silly. But I don't know if we'll hear that one. But all kinds of fun stuff. You guys have all sorts of thoughts on trades and everything else. Hit us up. We like to hear from you guys. Keep the love coming. Let's see. And before we go, let's go back around the horn. Let's start with the meatball, because it's just me and him here right now. What's cooking in the land of the pit and the land of Carmen Line, Mr. Meatball?
Well, we're still in the middle of the throes of our Made Easy series at Option Pit. We're doing options made easy. You should come and check it out and learn how to trade options the easy way from me and Andrew. And at Carmen Line, like I said, if you are an accredited investor and interested in a smart way to be long the S&P that does have a hedging program as well, reach out to me, Mark at Carmen Line Capital. I'd love to talk to you about the smart ways that we are trading volatility.
I didn't know a Made Easy program could have throws. It's interesting, though.
Oh,
I want to be in the throes
does.
of Made. That just sounds fun. So if you too want to join the throes of the Made Easy madness, head on over to optionpit.com to learn more and perhaps sign up. You too can experience the throes of the Made Easy. Might have to have that somewhere in our title. I like that. All right, and on behalf of the Meatball, we'll throw in the Rock Lobster, whatever the heck he's doing out there as well, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. Keep them coming. Your myriad vitriol on VIX risk reversals, and you're taking our titles too literally. All the fun stuff you guys do. We'll see you next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.